Hi folks, it's Björn here, and Business Quant posted another bearish article about Sofi on Seeking Alpha, talking about Sofi's stock-based compensation and is warning us all. And as it was commented in my last video as well, thank you Frozen Shorts to point it out, as it is indeed an important factor for us investors. I thought let's have a look what the article is saying, followed by my opinion and the pros and the cons. So the video is quite packed, but I encourage you to watch the whole video in order to get the full picture. And if you like informations like this, then please hit the like button and consider maybe even subscribing for more daily updates and infos. That being said, in case you didn't see my video commenting the last Business Quant's bearish article and why they said you should better sell, I will link the video at the end of this one. In this one, however, Business Quant warns all of us Sofi investors because of the high stock-based compensation expenses. First, he says that Sofi seems to be at current levels an attractive buy, as Sofi reported great Q4 earnings and an upbeat guidance for 2022. But then pointing out that investing in Sofi is not that straightforward, as he said, and I quote, "Its stock-based compensation expenses are one of the highest in its industry and are guided to increase by another 42% in 2022. So this year, this is likely to impair Sofi's GAAP profitability and keep its stock price distressed in the foreseeable future." Here I can say already he has a point and that he is completely right. But let's see what he says about why it is a problem. And basically he starts to explain why companies generally pay their key employees with some restricted or performance stock units. And further he says, this helps in building an entrepreneurial mindset amongst these key employees and reduce the attrition rate. Moreover, stock-based rewards lower the upfront cash expense burden on companies and allow them to freely invest in growth initiatives instead. So it's a win-win for both the key employees and the company. Again, so far I can agree with that, but he misses to say that the stock compensation is often used by startup companies since they typically do not have the cash on hand to pay employees competitive rates. Executives and staff may share in the company's growth and profits that way, and many laws and compliance issues must be adhered to, such as tax treatment and deductibility, registration issues and expense charges. Further, he says that SPC, stock-based compensation, is not always a win for shareholders, as these stock options and restrict stock units increase the total share count and therefore dilute existing shareholders. And I quote here, "If the management and their board aren't mindful of their stock-based compensation levels and treat it like free money instead, then it becomes an exorbitant cost to the company's existing shareholders." This, in my opinion, is what's happening at Sofi's Technologies, and it's one of the major reasons why readers are skeptical about investing in the company. Well, to understand this statement, we have to look at the financial statements, and indeed, Sofi's SPC was 77 million last quarter, which is roughly 28% of the company's total revenue, as the adjusted net revenue was 280 million for Q4, and just a reference in Q4 2020, it was 30 million in SPC. So it more than doubled in 1 year, and the total amount for the 2021 was 240 million, which represents a 24.5% of the company's total revenue. Folks, so far he did a pretty good research, I must say. But now he compares Sofi SPC with other stocks from the same sector, such as Upstart and Lending Club, and here we can see that Sofi is way above all of them. And no worries, I cross-checked them and the results are solid. Now folks, I wonder why he left out a firm, for example, as their SPC increased for the whole year 2021 by 29%. If I take the 870 million in total revenue and the 257.9 million increase in stock-based compensation. Now, I'm not saying Sofi's SPC isn't high, but compared to others, I think again, you can compare Sofi with the Visa, for example. And if we look at the tech sector, I would say Sofi is in range. But yes, way higher than Upstart and Lending Club, for example. Plus, the company's management guided in their earnings call that their stock compensation expense are going to increase 42% in 2022. As for 2021, it was 240 million, but they expected to come in at 340 million in 2022, so this year. But to sum his findings up, Sofi shares are down by a lot, and it could trigger that the management thinks that their stock compensation should be higher and that they could rise the stock compensations, which would dilute the stock even more and would prevent it from becoming profitable faster. I quote, "Sofi's quarterly revenue has quadrupled over the last 2 years and its pace of revenue growth is one of the highest in its industry group. Also, its management is guiding their adjusted net revenue to grow 55% during 2022. But further he says, Sofi Technologies has a huge stock-based compensation expense component which drags its bottom line lower. Its shareholders are unlikely to see GAAP profitability in the foreseeable future and they'll be prone to continued dilution. So risk-averse investors who don't have the appetite for significant portfolio drawdowns may want to avoid the stock for the time being at least. Investors who have a greater risk appetite understand the dilutive risks of investing in Sofi and have a long-term horizon, may want to accumulate the stock on potential price corrections. Good luck." Now, what do I think of it? Well, compared to the last article they wrote, this one is pretty good. And if you like it as an investor or not, these are the facts. And it's on you if you are concerned about it or not. Me, however, I'm not concerned, as I prefer they get a stock-based compensation instead of a high salary, which is as well better for the company financial-wise, and it binds the management to the company and work for the company in their best interest, and won't do shitty work or just don't care and leave or get fired, like it happens in other companies. You understand what I'm trying to say here, right? Plus, any buyback of shares would offset the SPC, and that could Sofi easily do in the future, and we don't know for how long they will increase and when they will decrease the SPC, and I am a long-term investor, so I don't really care about it right now. And by the way, Anthony just bought a couple of shares, and on the screen you can see that, for example, Michelle Jill exercised restricted stocks. Well, what are restricted stocks? RSUs provide an incentive for employees to stay with the company for the long term and help it perform well so that their shares increase in value. If an employee decides to hold their shares until they receive the full vested allocation and the company's stock rises, the employee receives the capital gain minus the value of the shares withheld for the income taxes and the amount due to capital gains taxes. So now you have an idea of what it means if you always look up institutional ownerships, alright? But again, Sofi's SPC is high. Yes, but they are quite young and it's not uncommon, especially in the tech sector. Now we could argue if fintech sector or better Sofi counts to the tech sector or to the lending sector, etc. But for me, Sofi is more than just a lending company. As I stated in my last video already, they have Galileo and Technisys and tons of products and not just only lending. Plus, I believe in Anthony Noto as being a great CEO, and I doubt that he will forget about his shareholders and just thinks about himself. But let me know in the comments what you think. Are you concerned about the high SPC and did you knew about it? As I would be interested to know your opinion and the community for sure as well. That being said, if you liked the video, please give me a thumbs up so that other retail investors like you and me have the chance to see this video as well. And if you're on my channel for the first time, I would be happy if you would subscribe, because I regularly produce new videos and tutorials on the topics of stock analysis, investment and financial products to give you the opportunity to take your finance into your own hands. That being said, if you like the content and you want to support my channel with a few bucks so I can produce even more videos, I will pin the link to my Patreon page in the comments below. That's it for today. Thanks for watching, and as always, stay focused and don't be greedy. See you next time.